Good day, everyone. Alice here from Safi Financial Network. Today is May 13, 2023. Here is weekly analysis, weekly edition for our analysis every day. So S&P 500 daily chart. This is weekly chart, and market just had a bearish week last week, and it doesn't hold up pretty well this area. So because if you just track the price here, it's kind of like a consolidation breakout to the outside, but it didn't go above this. Uh, we will review Nasdaq as well. Nasdaq goes above this level, but S&P 500 didn't go above January top, coming down, and this downside move is not that strong. This means market still is in consolidation phase, and this consolidation phase can come up with some more bearish action next 2 weeks. The reason I'm talking about the bearish action is this. So if you just look at this one, first of all, I just brought up my cycles um, many times in previous videos, and I was talking about the May time frame. May time frame is going to be a consolidation to the downside, and that's going to be a kind of like opportunity for buy for the next leg up, possibly to 42 to 4300, and we are getting back to this August top, and we will talk about this August top, why it is important. But right now, market just coming down. Momentum wise, stochastic momentum just a signal for the bear reversal. Price action wise, we just got confirmation. It's not that strong. This means the correction is coming, not a sharp sell-off or crash. This could be a sharp sell-off, but not a crash to 4,000 level. And also IMI just reversing back down 2-3 weeks ago here when we are getting close to 70 level, which is pretty important. If you look at the RSI, which is another important indicator, just the momentum strength, you see it goes to this pivotal point, breakout. Right now, RSI is getting back to this area. So it means there are lots of resistance here in this area, RSI wise. So market needs to show strong momentum to the upside if we want to see breakout above 60% level, I should say, to the overbought, which is kind of like a pretty bullish action. Right now, we don't see that one. And also, I just want to talk about this August. So why everyone is focusing on this August top? So the reason August top is important is that was the last pivot, the upside pivot or relief rally, ended up to the lower low. So this August top initiate the market bottom in October. But after market bottom in October, we see like a nice rally to the upside and a series of lower high here. Higher lows here and also higher highs as well, except this one. And right now, everyone just saying, okay, here is going to be a head and shoulder and it's going to break out to this area and something like that, which I don't think it's going to happen. But this August top, if you just look at the market, this one, here is the pivotal point in March 2022, goes back to this consolidation area. Nice surge to the upside. So that was a huge volume. And market just sold off after that sharply for I think it was 7 weeks down before this reversal. So it just go below this pivotal point, coming back up, hit this goodbye kiss level or scene of crime, coming down. And then this August top is happening just because in this August top is very important. It was just compared to this here. So it was a lower low. Lower low, this August top goes all the way, engulf this pivotal point, goes back to this wide range bar, which is pretty bullish action. This is so far is very, very bullish action. But we need to see resumption to go above this pivotal point and protect or support or defend this level, which is 4200. But August top didn't do that. It just reversing back down sharply, ended up to the lower low. So lots of buyers here, they thought that, okay, probably market is getting back to the upside. This is the bottom. lots of buyers trapped there. They become sellers after this sharp rally. Traders just got lots of orders, stop hunted all the way down to here to the October low. Right now, there are lots of sell orders here, and that's why market just tackled a couple of times. It couldn't end up very well. It just go pretty close to 4,200 to 4,300, and then coming down. Like this is the first tackle, this is the second tackle, just a slightly higher. The third one that we just experiencing right now, it just go here to this area, to this selling opportunity here, and market is coming down. So as much as we hit this level is getting weaker and weaker, and ultimately needs to get above this. But it is very, very important, folks, for bulls, we need to close, weekly close above this level. We didn't get even close to 4,200. Yes, we just touched 4,200 and then coming back down. So this is the top, and we just get to 4187. So we had like a 13 units to 4,200. We didn't get there. If you just look at the monthly review, which I have done 2 weeks ago, 4,200 for S&P is the last trench for bears and bulls. So it's kind of like a decisive moment for the monthly chart. But for weekly chart, we are just getting to the 42 level and then coming down. And right now we are at 4118, 4118, 4119. And this can go down even more to 4,000 to 4,025, 30 level for a rally, for the next rally after that to this area. I'm not expecting, to be honest, prices getting above this in 2023. I know there are lots of bullish. You can't believe that lots of bullish readings coming to the market just recently last week. So the lots of bulls are talking about probably this consolidation ended up to new all-time high. Even some of them are saying in 2023 we can hit a new all-time high. I'm not sure about that one just because liquidity of the banking system is at the lowest level and market is here. So when liquidity is coming back to support the market, possibly market is gonna skyrocket to the upside. Again, that's kind of like a fundamental news behind that, but I'm not sure about this. There are lots of bearish news and bearish fundamental cases you can just make for a bearish action. The way that I'm just inclining to is market is doing like a choppy consolidation. It's going to continue for the next 2 to 3 months, choppy consolidation to the upside. So the next buying opportunity is going to be here. That's going to be the ideal scenario, but I think market is going to end it up to 4,000 level. It doesn't go all the way down to here to 3,900. It goes to 4,000 level, and then if we see a reversal is coming up, then we can see 42, 4,300 level to the August top. If it happens by August time frame, I should say that's going to be the top. And after August time frame, everyone is kind of like disappointing, I should say, based on my cycles. If it changes my analysis, I will let you know. So we need to pay attention to the August top. So here's the thing. August top engulfing weekly candle. We are getting back to the bull side. Any dip could be a buying opportunity, regardless of the yield curve, recession, whatever you want to see. Technical wise, we are pretty good. But if we don't get above August top, and then we are just rolling over to the downside, and we take out this pivotal point and this pivotal point, so they're pretty close to each other. If we go down to, let's say, 37, 3600, then we should see resumption of this bear market, which I believe we are in a bear market. We are in a secular bear market, and we are in a cyclical bull market right now within a secular bear market. So it doesn't mean that we are just getting below or above this trend line. These trend lines are just for a trading perspective. But overall, when I just look at the chart, still market needs to go down to 32 to 3400 at least to test this consolidation or market top here on the February prior COVID crash. Right now we are just there, and we don't see any like a pullback to here, which I believe it's going to happen in 2024, which is going to be a different cases. All right, so it's kind of like a getting longer, but I just want to make sure everyone understand the dynamic of the market. We are not in a crazy bull market. This is kind of relief rally in a bigger time frame. So still we are in a bear market. We are in a secular bear market that started December 2021, and still we are there. All right, so moving on to daily chart for S&P. Here's the S&P daily chart consolidation phase. So I'm expecting prices coming down. This consolidation can fail all the way down to here to 4,000. I'm not sure if it's going to go down below this pivotal point, but that would be ideal scenario if you see something like this. It goes down below this pivotal point and everyone just stop hunted and reversal. A sharp reversal needs to be seen after like getting below this pivotal point and then sharply coming back up above 4,000, ideally 4,050. That would be pretty bullish action, and I believe that bullish action can end it up to the rally to go above this level. It's going to be a substantial rally after that if that happens. So I'm not sure if that happens, but if that happens, that's going to be a pretty nice buying opportunities coming down the road, I should say, for next 2-3 weeks. Moving on to Nasdaq. So here's the Nasdaq. Let's go to the weekly chart as well. So Nasdaq weekly chart is kind of like a better. We're almost for 2-3 weeks stochastic wise, we are momentum wise in overbought condition. So that's why it hold up pretty well. Again, overbought, it doesn't mean selling opportunity. Overbought, when you have uptrend, something like this is a short-term uptrend. Short term, I mean since October, based on the weekly chart. And when you see like a series of a higher low, higher high, higher low, higher high, when you see something like this, it is very, very natural to see overbought condition. But right now, market is kind of like momentum wise. In MACD, we're seeing sloping down. RSI, we are just getting above this. It's absolutely better than compared to S&P 500, we are just engulfing this area. So that's why I'm kind of like inclined to the bullish reading for now, for the next 3 months, because if we go down here, probably we're going to just test this area and then coming back up to the bull side. So all in all, for Nasdaq, I'm expecting prices coming down to 12,400, 12,300 for the next buying opportunity. Then this next buying opportunity can end up to 14,000. So we will see. We can see a Nasdaq engulfing this August top, but it doesn't have confirmation with S&P. That is very, very important. And also, I just want to show you something else today, which is very, very important. And we will get back to that one in later in after a US30 analysis. Daily chart, so kind of like ending diagonal forming, very, very frustrative. To be honest, folks, this move is very, very frustrating. Lots of stocks coming down, lots of stocks going up. So the way that I see here is kind of like if you have a nice, decent portfolio, probably you're not going anywhere. If you have a bad portfolio, despite of this bullish momentum, higher highs, higher low, you're negative. So again, my portfolio is pretty decent valued. I think it has like a both valued and growth stocks there. So we have nice decent gain since beginning of this year. It's all about a 14%, 13 to 14% gain. But last month, we didn't go anywhere. We just 2%, 1% positive. Market just going very, very choppy. And this is the reason. That's very, very choppy, sloppy since March 31st. So daily chart, if we can go down to here to this area to 12,000, and ideal scenario is going to be here 12,200 to 12,300. So that's going to be kind of like a pullback. Nice pullback to this wide range bar. This wide range bar is breakout to this here and initiate this rally. So we can have like a back test to here, and we'll see if it goes down. That would be a nice buying opportunity, right? So Moving on to US 30. So here is the US 30 weekly chart. So US 30 is kind of like a better. I should say it was weaker last 2-3 weeks, but overall, you see, we just got above August top while ago, like in December 2023, we got above August top. And right now we are just forming another bullish case, kind of like a reverse head and shoulder in this wedge pattern. This is kind of like an overall a nice bull flag. So this bull flag, the flag is going to see apex or kind of like a megaphone type that we can see here coming down here to 32,000 100 to 32,400. So that's going to be the level that I'm looking for. And then if we see a down dip to here, then we should see how market is going to react 32,000 in overall. If it holds 32,000, that's going to be kind of like a bullish case to 39,000, which is going to be kind of like yeah, it's going to be a new all-time high, 39,000 to 40,000 by August, September this year. So I'm not going to be surprised if we see Dow Jones, this pattern ended up to the new all-time high. And that divergence is going to be very, very obvious when you see S&P and Nasdaq, they're just lagging and Dow Jones is leading to the new all-time high, which is kind of like a scary, especially for the August, September time frame. The next one that I want to show you is RSP. So this is the chart for RSP, and RSP is S&P 500. This is Invesco S&P 500 equal weight. So it means that all stocks, they have equal weight, 1 to 1 in S&P 500. It doesn't mean that like Apple is going to be $3 trillion market cap, which is kind of like a heavy loaded in Nasdaq and S&P. In RSP, Apple is going to be similar to another company, another just a small cap company if it is there in S&P 500. So this chart tells me that market doesn't have momentum. Like in tech world, you will see Microsoft, Amazon, Meta is doing better, Nvidia, they're doing better. But S&P 500, like the other stocks in S&P 500, they're not doing well. And this pattern is QM pattern. And this can end up very, very ugly to the lower low. It can happen. And that's kind of like the scary part of the market. So when I see something like this, if it goes below this pivotal point, folks, which is 135, right now we are at what, 41. So if it goes below 135 and close daily below this, so that's going to be ugly. It can go all the way down here to 124 to test the double bottom here, or even it can go lower. So that's interesting, just because market doesn't have momentum on the other stocks when we have a good momentum in some individual names, which means market in overall is not healthy. If it is healthy, we need to see a broad-based rally, broad-based sell-off, something like that. But we are not seeing a broad base. Again, if you just compare my word right now compared to the way that I was talking about different indexes, we see Dow Jones is doing better compared to Nasdaq and S&P in overall. I mean, like there is a divergence between indexes, which is not good, just because it says market is just money is just shifting over to some individual names, and they're just disappointed with other names, which is not a healthy economy, because economy is like a strong organism. So you can't have like a head. Just imagine economy in overall is going to be a human, and you can't have like a head is growing and growing and growing, but the legs or hands are not growing, even they're shrinking. So what type of human is that be? So economy is going to be like that. We need to see a broad-based rally growth, or even broad-based sell-off. So you can see this is a broad-based sell-off. This is kind of like the bad economy. But right now we are not in a healthy environment, at least for a stock market. I'm not an economist. I'm not talking about economy. But in the stock market world, you will see there are some individual names are outperforming the market while the other stocks are not doing well. So this is kind of like the warning sign, if you ask me. Moving on to yield, let me just pull out the yield chart. So here is the yield. Had a positive day on Friday. It goes to again getting close to 4%. So seems like after very choppy April, May, yield is finding the bottom here, I should say. Again, it's pretty early call to say that, but right now yield is kind of like a reversing back up. And if it goes below this, I should say no, it's going to be just this head and shoulder can go down. Ultimately, which I think it's going to go down. But for now, because dollar is getting strength as well, I'm getting to the dollar chart a bit. But right now, yield is just forming a bullish case right now. So this is going to be a bad for precious metals. This is going to be a bad for, I should say, Nasdaq and techies as well. So that's why I'm kind of like a cautious in those words as well. TLT, inverse correlation between TLT and yield, and that's why TLT is coming down on Friday. So TLT is going down. Possible scenario still is going to be on my card that 101, 100 is going to be a kind of like a dip for the TLT, which is getting close below this, because right now we are just seeing double bottom here. It didn't end up to higher highs. It just go test this area and then coming down sharply. So we should see TLT. If yield is going up, TLT is getting back to 101, 100 level. Google had a downtick on Friday, so Google after a nice surge on May 4th, right now it's just a significant top, I believe. And sorry, this is gold. Gold after significant top on May, so we are just seeing coming down. If it goes below 2000 level, then it's going to be a sharp sell-off, which I believe after Dixie and TL and also yield is showing some kind of like a strength, then we should see gold can go down more even to 1800, low 1900. So this demand area is kind of like interesting. See how market is going to react, but any close below 1975, that's going to be ugly. It can go all the way down to low 1900. US 30, which is crude, is coming down, reversing back down. So yield is positive, but crude is negative. So that's interesting. Usually it goes with each other. So right now, crude is showing weakness. If it goes down here again, that could be kind of like a bad scenario for crude because this can end up to 51 to 53. It can go down more. VIX just a positive flat. So VIX means doesn't fear still in the market. So I should say VIX is forming a bottoming formation at least for now. This can have a spike. It can go to this level again or even higher. But again, that's going to be kind of like a selling opportunity for VIX, and that's going to be a bottom for the stock market. As we're expecting, market can go down next 2 weeks, and this can spike up to here. But again, if it goes here and market is coming down, that should be kind of like bottoming formation for the market and top for the VIX. Dollar just a strength a bit, so this means dollar just got defended here with this demand area around 99 to 100 level. So dollar goes above this. This is totally bullish price action, especially last 2 days. I mean, Friday and Thursday, if you had a nice positive surge to the upside, dollar can go to 103, 104. So we'll see how it goes for now. Moving on to technology sector, Apple is coming down. $18, I believe it can go down lower. So we have analysis for Nasdaq and S&P. They are in corrective move, and Apple can go down as well. Amazon can go down, so we just have like a $1.92 downtick. Amazon can end it up to the lower low here, so this is kind of like a dynamic trend line. We are breaking above this trend line. We shouldn't go below this. probably early June, later May, we see Amazon bottoming formation. Meta just a $2 down, so this is forming a bearish consolidation right now. If it goes below this 230, this can go down all the way to 213. Microsoft at $1.14. 308, it's sitting on that one, so it's kind of like a forming ending diagonal 292 300. So Google 94 cents up. Google is kind of like a diverging, it's kind of like outperforming the market right now. Definitely it's going to be interesting. We should just have a look on this one. If it goes above August top, again August top, so it's going to go all the way up to here to 128 130, which is going to be the next supply area. Netflix $4 down after hitting this top. So if Netflix can't go above this April top and it goes back here to this level, I should say still this is going to be in my card 250 to 270. So we'll see how it goes. Tesla $4 down. Tesla still can go down to here. So it's kind of like a zigzagging up and down, but ultimately Tesla can go down to 135 to 145. We will see. Semiconductor SMH, it's forming kind of like a rolling over to the downside, and this head and shoulder pattern, it seems like it's getting crazy. So right now, if SMH take out this pivotal point, which is 118, I should say it can go down to this gap. Yeah, there is going to be a support here, but it's going to be a small bounce. Ultimately, I should say 104, 108, that's going to be the level that I'm looking for. SOX, the same pattern. This one goes down as well. So if this one takes out 390, it can go down to the same level, 359, 360. TSM, just a flat day doji bar. TSM is in weaker side. So if this one goes down to the lower low, it shouldn't surprise. I should say 77 to 80, which is this gap, could be a buying opportunity or bottoming formation. AMD, after this nice surge to the upside, hitting our first target, coming down. So it can't go above March top, but it needs to have like a pullback. So again, pullback can go down to here to this, especially look at that. So here's the gap, here's the surge to the upside. Lots of buy orders are there. So AMD buyers are gonna just recommit back again. This level, let me just show you. So this level can be a very, very interesting to watch. So which is gonna like 80 to, I should say, let's see, 80 to $90, 88 to $90. That's going to be kind of like a buyers are coming back again, and even higher just a bit to this shadow, right? So here is the flag limit there. So 88 to 92, that's going to be the buyer zone, at least for a bounce. Nvidia $2.38 down. I know that I called the top here, still struggling after calling my top, so it doesn't go aggressively to the upside. But again, just breaking out this level, Nvidia can go down. I should say earning is going to be next week. So if Nvidia earning doesn't satisfy the market, that could be pretty aggressive price action. It can go down all the way to here for the first level and even lower. So we'll see how it goes. Texas Instrument, this one breaking down this area. So it's very interesting to hold up this level, but Texas Instrument forming an ending diagonal that can break down to the downside. Lam Research $38 down. This is not going anywhere, so it's pretty choppy, sloppy right now. Moving on to the financials, they're pretty weak. So they have like a hype bounce to the April 19, April 20, but after that, we're seeing choppy, sloppy. If this island reversal doesn't help them XLF, this can go down to here, again testing this wide range bar, which is kind of like interesting to see, because if this one doesn't hold, then we can see XLF is getting back down to here. Lots of buyers are going to be $28 to $30, so we'll see how it goes. KBE, this one is coming down as well, so this is not strong enough, which is a large cap ETF. KRE Regional Bank ETF, this one is weak. So this one can go down even to 30 level if it doesn't hold up pretty well around this 34.50. So we'll see how it goes, but 30 to 32, that's going to be kind of like a buyers are coming back here. So we'll see how it goes. JP Morgan, $2 down. JP Morgan, not as strong. So it was kind of like an outperformer of the market. It goes back to this all-time high top. Not all-time high. All-time high is way up there, but it's kind of like February top. But right now it just tested up this top and then coming down. So JP Morgan can go down to here. So we'll see how it goes. Goldman Sachs 122 loss for Goldman. Goldman is weak, so Goldman can go down below this, even. This can be helpful 280. Wells Fargo 84 cents down, so Wells Fargo. This can go down to $32, $34. So we'll see how it goes. Citigroup, the only positive name, but not good price action. It's just sloppy and choppy. If Citigroup can't hold up pretty well 27, 28, this can go down to 25. Moving on to the gold miners, GDX. So this one is coming along with gold. So GDX, wide price action. So it goes up to higher high to test this level. And I thought that, okay, this is a very, very bullish price action just because it goes above this supply area. But right now, it doesn't have follow-up. It goes down all the way to here, and GDX can go down to here to see if we see a reversal from 29 to 32. So we'll see how it goes. There are two levels down there. GDXJ, this one is coming down to 36 to 38. We'll see AEM, 3 cents down, so nothing bad, nothing good. Newmont just 6 cents up. So after going to this, so this is the level for Newmont that I was talking about. And market just reacted very, very nicely. Just a touch pierced through this to this area and then reversing back up 6 cents. Franco Nevada, $1.95 up. So not bad. It's better than gold price. Obviously, it was better than gold price. So gold price is smashed last 2 days. But gold miners actually just except on Thursday, Friday was a positive day for them. So Barrick Gold, 15 cents up, hold up for now, but this can go lower, I believe, for the next buying opportunity. Energy stocks, they were mixed. So crude was negative on Friday, but energy stocks were not bad. XOP, which is oil and gas exploration ETF, hold up here, but this one can go down. Still, not a good price action. So look at this dynamic trend line. It just hit this level and coming down, ended up to the lower low. Not a good action for bulls. OIH, which is 60 cents up. Still, these levels are going to be on my card. So we'll see how it goes. XOM, Exxon, 1 cent down. Bearish consolidation is forming. Exxon can go down here. I believe if it take out this pivotal point, this one can go down here. Chevron, 40 cents down. 40 cents up, but bearish candle. So this one doesn't hold up pretty well, this area. So this one can go down here. Oxy, 16 cents up. Rig, 17 cents up. So Rig is bullish compared to the other one, to be honest. But there is a but. So if it goes below 5.5, this can be ugly, going all the way down to here to this area. So we'll see how it goes. Okay, I think I covered everything. It was kind of longer than usual daily analysis, which every weekly analysis is going to be longer. But I believe I just explained lots of educational perspective materials in this video as well. So hope you like it. If you like it, please smash the like button, subscribe to our channel, and have a good weekend. See you on the chart. Bye-bye.